My usual client is, the usual 50 to 60 year old who has saved in their 401k, they're finally close to paying off their house, they've got a net worth of, let's say, $600,000, and they don't want to see it dissipate in 2 or 3 years at the end of their lives, because they'd like to either be able to use it the way they want to before they die, or leave it the way they want to after they die. Governor Dayton, I think, sent a letter out to a lot of people in the state of Minnesota saying that you really need to think of how you are going to pay for your care in the future. And so you either can pay for it out of your own pocket, you can spend all your assets away and get onto Medicaid, or you can get a long-term health care insurance policy, so when you need care down the road, the policy can pay for 100% of your care, or it can pay for 50% of your care. It just depends upon what you want. Now there's 4 major risks that you face to your assets during your lifetime, and those come from your car, your home, your short-term health care, and long-term care. And like everybody else, you built a wall of protection around 3 of those. So if you back out of the driveway tonight, you hit Mrs. Johnson's Lexus, break your hip at the same time, you don't dip into your assets to buy her a new Lexus and a new hip. Your car insurance pays for it. 1 in every 248 cars need to use their car insurance to the tune of $60,000. Same with your own home. Even if you own your own home outright, in other words, you don't have a mortgage, you'd never go to bed tonight without having insurance, because if your house burns down, then you've got to come up with $500,000 to build a new house, or whatever your house might cost. The fact of the matter is that 1 in 1,200 homes need to use their home insurance to the tune of $60,000. And then your short-term health. Today you have a heart attack and need a triple bypass, Blue Cross Blue Shield pays for it. Tomorrow you have a heart attack and need a triple bypass, Medicare Part A, Part B, and your Medicare supplement pay for that. So really the last boogeyman in the closet, if you will, is the risk of needing long-term care. And the fact of the matter is the risk of needing long-term care once you get to be age 65 in the United States is about 44% of the population will need 2.5 to 3 years of long-term care before death. When I come out and meet with people, we look at your health a little bit more closely, which typically doesn't take very long. We also look at your family history, how long people lived, what they died of, things of that nature. And the reason we take those 2 things, your health, your family history, we couple them with the 4 ways that people take care of long-term care at the end of their life, including how Medicare and Medicaid work in conjunction with long-term care. And we also go over the Minnesota State Partnership Law that further allows you to protect your assets if indeed you do have a policy. And pretty much at the end of that conversation, a typical couple will be able to decide for themselves, hey, is this right for us or isn't it right for us? I like to help the community out that I grew up in and that I live in. And so by having somebody like Greg and Home Care Assistance as a resource for not only my clients, but a lot of older people that I know in my community is great for really awareness of where they can get home care. It helps getting the awareness out of long-term health care insurance, that they can use this as a vehicle where they can have their long-term health care paid for, right? But also get care the way they want it delivered. Modern medicine really is the mother of long-term care. The good news is that we're living longer. The bad news is that we're all needing care at the very end of our lives.